creating a trading strategy. Hi, it's Charlie. I was asked this week if I could do a video on creating strategies or how you build them. So what I'm going to do in today's video is I will do that, but I'm going to go through a few things. So I'm going to go through some thoughts on and some tips on creating trading strategies. I'm going to go through, if we can go down here, I'm going to go through an example of a trading strategy that that I built years ago, and I'm going to go through some general advice with regards to trading strategies and creating them and what to do with them. So the bit on trading strategies itself, I'm going to do last, as far as going through some tips and advice on creating one. So what I'm going to do first of all is I'm going to do this about face. I'm going to do the general advice first of all, and then we're going to go through the example, and then we'll go through some other bits as far as tips on creating one. Okay, so my general advice is that trading is a lot more complex than just having a trading strategy. So if you think that all you need is a trading strategy, and then that's going to be your holy grail, that's going to fix all of your trading issues or whatever you want to call it, it's going to give you everything you need from trading, then I think you're probably, if I can write that down there, I think that you are going down the wrong path. Okay, and this is the path that so many traders go down, including experienced traders as well. They get caught up in this whole myth of having to have a trading strategy. And you'll be saying, yes, but you do need to have a trading strategy, Charlie. Yes, you do. You do need to have trading strategies, but it's about application is what I'm talking about here. So whereas people think that all they need is a trading strategy, that's not true. So for example, I've got a chart up here of the Russell 2000. Okay, so, and we can see that generally speaking, this has been in a downwards trend. This is a daily chart of the Russell 2000. Now, yep, fair enough, and probably short this rally is probably the advice on that. Short the rally, because the Russell's this is a bounce before it's bounced back up into these prior lows, etc., etc. And that might be the case. That may well be the case, but if we flip to a monthly time frame, we get a different perspective, and we can now see that this Russell 2000, it has come down into prior highs to test those. It's also come down into my 50, my black moving average here, my 50-month moving average, and I'm talking to 50s. It was also a 50% retracement of the move from the March 2020 lows to the highs of November last year. So it had done a fib retracement, and it had also pulled into prior highs and moving averages as well. And to tick things off, we've even got a 20 moving average, which is still facing upwards up there. So what I'm trying to say is you have to have context, and just purely having a pattern of a strategy and then solely trading that pattern, I think if you're trading intraday, I was going to say maybe if you're trading intraday, you don't need all this other stuff. Certainly if you're trading very short term, things like fundamentals are less important to you. But sentiment's always going to be important. That's a driver of prices even in the shorter term. So for me, trading is not that crude that I just pull out one of my strategies and go off and trade it. So if I'm going to trade something, I want to know, okay, so let's say I wanted to buy the pullback down here. Now I could just buy the pullback, of course, but let's say this is on a monthly time frame. Oh, you can't quite see it. There we go, monthly time frame here. So you might say, well, you You might be wanting to trade off the daily chart. So you know that price has come down into a zone here, but as it's on the monthly, this could have carried on overshooting, and then still come up. So just because it's come into that zone, you still got to try and get your entries right. So you might then come down to the daily chart and be looking for a strategy or pattern that you use on the daily chart in conjunction with this bigger time frame. So now what you're doing is you are combining time frames, multiple time frame analysis. So all of a sudden you're not just trading a singular strategy anymore. And so my advice is, certainly one piece of advice, is that you should be aware of the market sentiment. You should be aware of the fundamentals, not all, the general fundamentals of the markets. And then you also need to have multiple time frame analysis, MTA. And then, and only then, do you pull out the appropriate strategy for buying or selling at that time. So what I'm doing is I'm looking at all of these factors and then deciding, right, okay, I having looked at the sentiment, the fundamentals, and multiple time frame analysis, for argument's sake, I want to be a buyer down somewhere in this zone. Okay, I want to be a buyer. So that's got nothing to do with a strategy. It's analysis. Why do you think investment banks have all these analysts giving all of these this information out there? So now, analysts aren't traders, yes, and there's a reason why they're not, but nevertheless, as a trader, we still have to do analysis. And that analysis is so important, rather than just by blindly trying to trade the markets with a given strategy with nothing else going on. You can do it, if you've devised a strategy which has got an X percent win rate and all of that sort of stuff, and so you can do it. But I do think you're missing the point of the markets. The markets aren't that crude. The markets are a living, breathing organism, and so you just taking a strategy and then just solely trading that strategy, I think is not really the right path. Have strategies. So see strategies as something you have in your kit bag, and then at the appropriate time you'll pull out the strategy which is, we've pulled back into support. So in fact, on the daily chart, you're looking at a reversal strategy in this down here. So you have a reversal strategy for times when price is coming into lots of support, and then you'll have trend-based strategies, etc. And all of that as well. So this one on the daily chart would have been a reversal strategy down here, looking for some form of reversal patterns. Either it doesn't have to be right off the low itself, it could be several days later, but certainly that would be something you'd be looking at. So that's my general advice. My general advice is, please don't just trade strategies by themselves. Actually see it as a little bit deeper than that and do analysis first, and then you have a number of trading strategies that you will apply to the right context of the market. Okay, to the context of the market. So whether the market at that point is doing a pullback and you're using multiple time frames, or whether even coming back down to a daily chart, you've got the context of whatever on the dailies at this point as well. So context is really important. Now I'm going to give you an example of because I've been asked about building a strategy. How do you go about building or creating a strategy? Well, one of the things that I've generally done over the years is I haven't sat down and said, right, I'm going to build a strategy today. So most of the time, most of the strategies that I use have come as a result of observation. They come with, unfortunately, time. So they come with time in front of the markets, and so over time you notice things. I'm going to give you an example of an old strategy that I used to use. And so what I noticed many years ago is that price would come up. Let's say it's had a prior up run, makes a high, pulls back, makes another high, pulls back, makes another high. And so in the roughly the same area. And so this was something that I observed and thought, oh, well, I see this. Some traders would see this as a triple top. Yep, fair enough. Maybe it carries on coming down. But other traders, myself included, might see it as this is a market, and this is how I used to see it. This is a market which is it's knocking on the door of trying to break out here. So what I used to do years ago is I used to buy it on the fourth attempt or more, so it could be 4 or 5 attempts, whatever. But whatever the attempt is, it needs to have had a minimum of 3 peaks to start with. Then if it's on the 4th or the 5th, we get that breakout. Okay, so then I used to buy it on if it used to break out. Now, for a potential run higher. Now, what I noticed many years ago was that I was trading this strategy, if you will. And what I used to do is put my stop below the last low down here. And what I noticed is that, sometimes it would carry on going higher, but then other times it would become what we call a false breakout, and price would just come back down and stop me out down here. And only for price to then start to come all the way back up. This is off a 5-minute chart back in the day. So, a few hours later, it's come sneakily, it's come all the way back up to those highs again. So what I actually did was adapted the strategy and said, well, if I see this pattern of the 1, 2, 3 moves, instead of buying the 4th one now, let's say it's the 4th, I'm actually going to ignore that in case it becomes a false breakout. But if it becomes a false breakout and it comes down here, breaches the prior lows, and then starts to settle, then I'll buy it somewhere down in this zone over here. Okay? So I'm then buying it over here for this run up. Now, that can only come with time and observation, really, that you see these things happening. So this is a good example of that very pattern, and taking it and learning, from it and seeing the market, what was going on. That's how I learned the pattern in the first place, just by observation. You're just sitting there and you're seeing these patterns, and then you take it away and then you develop something with it. So, but that was a good example of how seeing these things playing out, you then say, right, okay, I'll do this. So unfortunately, it's very rare that I've sat down to say, I'm going to create a strategy. Mine have generally been as a result of, as a byproduct of my time in the markets and seeing, and being in front of the screens. And so I don't sit down like that. However, if you were going to sit down to create a trade, and we're coming back now, create a strategy, coming back down to the original part of this, just remember, I think if you're going to put a checklist together, what you're going to need to do is you're going to need to say, right, okay, if it's a trending market, there's only a few different ways that you can actually trade it. All right, so you're either going to be looking to buy pullbacks, or you're looking to buy breakouts. Okay, so then it's just a case of, if you've got that in mind and saying, okay, if I want to create a strategy and I need to have a trending market, first of all. So what do I do? If you're going to have a checklist, what do I want to use to define a trending market? Now, you could use price alone, and you could say price is making what? Higher highs, higher lows. But again, this is where multiple time frame analysis comes in, because it might be trending on a daily chart, but it's not on the month, and it's not trending. It's actually an overall downwards trend on the monthly. But anyway, for now, that's getting into all the politics of it. So for now, so you might be saying higher highs, higher lows. Okay, defining a trending environment. You might use moving averages, and you might say, okay, I've got a few moving averages that I use, and if they are upwards facing, let's say, and they're below price and they're upwards facing, then tick, we've got a trending market. So depending on however you want to define a trending market there. Then you're looking at either a pullback. So if we've got a market which is going higher and we're looking for a pullback in price, then okay, what are the criteria that you could use for pullbacks? So you can look for pullbacks into prior technical highs, which is a classic technical analysis. I see I'm running out of time here. You could use something like retracements such as Fibonacci. You could use moving averages. You could use trend lines. So again, there's a number of different types of pullbacks that you could look at, and so again you'd have to go through all of those. You see what I mean? It can take you a long time to create a strategy, but at least you're starting to build. You're building something here. You could just use a number of bars within a pullback. You could say, oh, it has to do 3 red bars continuously, or 4 red bars, or 5, or whatever. So, and then you might say, and then I need a reversal bar. Okay, so I've had X amount of down bars, or it's pulled back a certain distance, and then I'm looking for an up bar. Okay, so that's then, so that you're starting to get the remnants of a strategy you're putting together. And then what you're doing is you're looking at, okay, if I'm then going to come in over here, where am I going to place my stop? What sort of target am I going to look at? So then once you've created the pattern itself, then you go through various different stops and targets that you're going to be looking at. So you've created your pattern, you created your sort of what you think looks like a reasonable pattern, depending on what you've used. And then you've got to try and then make it into something, and that comes down to stops and targets. So then you can go and test various different stop loss levels, various different target levels, or even using a trailing stop, all that's harder to back test. Anyway, so there's some pointers there, and that's just on one type of strategy. I'm already running out of time here. My main advice though is, yes, you do, of course, I have strategies that I use, but I don't blindly trade them. I use the strategies in conjunction with that analysis. So first and foremost, it's all of that analysis, not just multiple time frames and technical analysis on the chart. Where are we relative to support and resistance and all of that? But it's also the sentiment and the general market analysis as well. Before I then I'm making a decision on, okay, do I want to be long this market or do I want to be short this market? If I want to be short this market, okay, what strategy would I use? What would price need to do in order to get me to go short? And then I'll just use one of the strategies that I have to short. And likewise, if I want to be long this market, then which strategy do I want to pull out? What does it need to do in order for me to then gain an entry with a given stop and target? So a bit of a longer video there today on strategies, but I really do hope that some people take it on board that trading is not as simple as just going off and trading a strategy. You get all this nonsense on the internet and YouTube and stuff saying you just need a great strategy and stuff. Strategies are important because they give you rules, but you still have to place them in the right context of the market. And so unfortunately, what you do need to do is roll your sleeves up, do your analysis, work your way through your time frames. You don't have to go out to a monthly time frame like I went through on this. You might be an intraday trader, but even if you're an intraday trader trading off a 5-minute chart, you should be aware of what's going on the hourly and probably the 4-hourly chart as well, and use those as your anchors. So anyway, hopefully I've given some food for thought. If anyone wants to add anything to this video, then by all means do so.